Welcome, everyone, to today's episode of Wolf Street. As always, you can check me out online at Every Time I Cash on all social media platforms, or you can check me out directly on my website, everytimeicash.com. Feel free to reach out to me on all social media platforms at Every Time I Cash, or feel free to reach out to me directly with an email using the contact page, everytimeicash.com/contact. Today's episode is going to be a little bit of a continuation from the last one. I did an emergency podcast video on Saturday after hearing that Trump was going to the hospital for COVID. So today is going to be more in depth. It's going to be a follow up of that. And I will go ahead and chart bomb basically some of the requests that I got online today. Um, if you have any chart requests, you can request them at everytimeicash.com/contact or just reply to any of my tweets and or comments on stock twits saying what it is that you want. I tried to get all of the ones that I saw outside of like the micro cap ones. So hopefully I covered them. If I missed anything, please reach out to me and then I'll just at you directly. Okay, so without further ado, let's get started. If you're watching the YouTube, you will see the Russell 2000 index chart. Uh, there is a audio version of this podcast and a video version. So if you're listening to the audio and you want to check out the video, check it out on YouTube at Every Time I Cash. I ended Saturday's podcast saying that there's been a little bit of relative strength in domestic names, and I hinted at the idea that the Russell had been outperforming the Nasdaq in particular as of late, and I wanted to pull up what it was that I was talking about on Saturday. On Saturday, I mentioned that the 145 level on the Russell signified a pretty important level for stocks, in particular for the Russell itself. So I pulled it up here on your screen, and I've gone ahead and I've circled all of the 145 tests of the last 2 years, basically. So if this stretches back to November of 2018. Um, no, excuse me, February of 2018. So if you're looking on your screen, I've circled all of the 145 tests. Essentially, breakdowns below this 145 level, which is outlined in blue, have resulted in sell-offs, and it's been exacerbated. So you see the December 2018 sell-off, you see the recent sell-off we had this year in March of 2020. So essentially, the 145 level in the Russell has been important. It's been a very important level. And we recently tested that level. Let me go ahead and highlight it here in particular. We recently tested that level in early September. So it's it was and it will remain an important level for that Russell. And essentially, you want to look to see if these levels hold in the Russell, and if they do, you want to look to be a potential buyer. And if they don't hold, you want to look to be a net seller at that point. So I'm going to go ahead and take off these circles. I'll go ahead and put them back on and post this chart here in a bit, but I want to take them off just to kind of illustrate another point. So we set a high water mark, call it 1600, in the IWM as of August 11th. We're pressing, and then we've kind of been in this slight downtrend ever since, and we're kind of pressing back up against that downtrend. This level is important, and it's a critical level because this is essentially where we broke down on the 26th of February when we broke below the 200-day on the IWM. So we've pressed below, or we've pressed above, excuse me, that February 26th level, and we're going to go ahead and essentially the goal for the IWM is to retest the 1600 level, which is signified by that 25th level, 25th of February level. And if we could break back above that, we will then set ourselves up for a potential retest of this 1700 level, and ultimately this recent high water mark that we set in early February, late January. So the important part here is that the IWM never made a new high when the market made a new high earlier this year. So we haven't made a new high in the IWM since 2018. Um, and if I pull this back down for you, and I just draw this out, essentially we're in this like really slight sloping downtrend in the IWM. So basically, if we can push through the 1600 level and then back and fill for a little bit, you're going to look to test potentially this 1690 to 1700 level in the IWM. And then if we have any real strength, look for 1740 to eventually get tested. This is important because this is just basically domestic. So the IWM, the Russell in particular, is a tell on domestic stocks. In particular, it's a tell on healthcare, banks, and consumer discretionary. And if you look at what has performed in the last month, and in particular what's performed in the last week and the last day, some of the things that have been performing and been outperforming have in fact been those sectors. So I'm gonna pound through this pretty quickly here in a bit, but I just wanted to start off there, and I wanted to note this because if we start to see an outperformance in the IWM, you could see an instance where the scenario that I talked about on the last podcast and podcast before that plays out, where you start to see these mega cap names not perform or not perform as well as they did, and then start to see a little bit more of a broadening out. Without necessarily seeing an acceleration to the upside in the S&P in particular. So if you're one of these people that subscribes to the notion that we're going to have a broadening out in the entire marketplace, and that you're going to see a synchronized global recovery, and in particular you're going to see a domestic recovery and a consumer recovery, there is a potential that you start to see stocks like Amazon, Google, Microsoft that carried us kind of start to stall here for a little bit, and start to see performance in some of these smaller cap names and some of these smaller names, which don't necessarily offset the losses in those heavy tech names. So it's an important thing to notice. And there's a lot of sleeping. Stocks and sleeping indexes, ETFs underneath the surface that a lot of people don't follow, myself included. But I wanted to start there because I did notice, and I have seen, and we have been seeing some notable relative outperformance in this sector. Moving forward, we got the S&P 500 on the last podcast. I illustrated to you guys that the 3,400 level would eventually get pushed, and we potentially see a test there if we don't necessarily break down back down to this 100-day. So let me highlight this 100-day with this arrow. So I indicated that if we don't get back down to the 100-day, you will potentially see a retest of this 3,400 level. I'm going to now pull up the S&P 500. Let me see. Did I put it on SPY? Hold on one second. Yeah, I don't know where I put it. Anyways, I'll go ahead and just draw it out for you. Actually, let me go to the SPX 500. Essentially, I want to pull up a fib chart here and just kind of ballpark it for you. So if I pull up some fib retracements here, we're going to, where is it? No, I messed it up. So I'm gonna scrap it. I'll post it a little bit later. I had it drawn up, but I'm not sure where I put it. So my apologies. Anyways, just take my word for it here. Essentially, this 3,400 level in the SPX is it runs simultaneous with the 50% retrace on the Fibonacci. And essentially, what I was looking for is a push through of this 3400 level, and then a retest of the 618, which I have at around um, 3440, give or take. So just keep that in mind. Table that. I'll go ahead and I'll post the chart on StockTwits or on Twitter later. But essentially, I messed it up, and I don't want to go through it, and I don't want to. I'm not really familiar with how TradingView has their fibs here. Um, so that's kind of those are kind of the levels I'm looking for here. I'm looking for a push through, and then a push back up to potentially 3450 on the S&P 500. And if we can push through there, then you're looking at a potential retest of 3600, give or take. So if we just move right along, you got the Nasdaq 100. Same kind of concept here. We're pushing up against this. If you just look at, and I mentioned this last night, if you just look at, or I mentioned this on Saturday, excuse me, if you just look at the last month in the in the Nasdaq, we've just been moving back and forth along this range here. I just kind of drew a little circle around it. Essentially, we press back up against this 11,600 level on the Nasdaq 100, and we find resistance there pretty much every time. If we could push through that level, looking at 11,700, 11,770, and then ultimately, and this is kind of something that I outlined today with earnings season around the corner, I could see a potential retest of this high that we set back in early September before potentially possibly double topping if we have some sort of chaos, et cetera, et cetera. Now, it's really important to remember, and it's really important to note that a lot of this stuff that is taking place today and a lot of the things that are going to take place moving forward are really dependent on factors that aren't necessarily related to the market. So, in particular, Trump got COVID, and there's really no idea kind of where he is on the spectrum of how bad it is and how bad it isn't. People who like him will tell you, "Oh my God, look, it's so great. He recovered in a couple days. It's not that bad." And he'll try to convince you and convince his audience that, "Hey, I got through it really quick. I'm a leader. Things are great. Everything's great. We're gonna do everything great." Now, on the other side, doctors, scientists, etc., will tell you that you don't recover from it in 3 days, and that you still are a carrier, and this is um, unbecoming behavior, yada yada yada. The important part for our sake, from the market's perspective on this, is, uh, and I'm kind of going to give you a little bit of a backwards logic here. So on Saturday, when I first heard the news, I said that it was a uncertainty, and initially it is an uncertainty. Now, the important part for our sake is we had election uncertainty that kind of hung over the market. And as long as this election uncertainty hangs over the market, it will be difficult for the market to continue meaningfully moving forward until that uncertainty is resolved. Now, I say that to preface the fact that as long as this guy's got COVID, and as long as his response to him having COVID continues to appear weak, um, and I say weak in terms of how he's handled it, uh, then the polling data and the gap between Trump and Biden should widen. And I say this apolitically, like I'm not saying this like I want so and so to win, I want someone else to win, or any of that. But just if there is uncertainty about the election in terms of election results, and if the caveat to the election results, if the polls are, if we're going to assume that the polling data by and large is semi-accurate, right, and we can adjust that basically 200 basis points, and assume that there's 200 basis points worth of error, so 2 points worth of error, and even if you did that, you have Biden being favorable, right? If we assume that Trump's handling of COVID in this latest instance and this latest gaffe um, ends up damaging his odds, then we can assume that it only widens the gap between Trump and Biden, which is what we woke up to today, right? So, disapproval ratings up in terms of COVID response, disapproval ratings up across the board, and the uh, the gap between Biden and Trump did in fact widen. Now, again, this is just polling data, right? So, um, it's not complete. It's not completely in, and things aren't 100% over, but this is the data that we have to work with, and the market is in fact a forward pricing mechanism. So if we have that, and we have this gap widen, then the uncertainty behind an election contest, or the uncertainty behind what's going to happen, is he going to concede, yada yada yada, um, grows smaller and smaller. And so if that uncertainty gets smaller and smaller, then that is one little breather that the market could take. And then it just becomes a matter of, does the result actually validate the polling data and the assumption of the market? And if that's the case, then that uncertainty gets tabled, and you could see a little bit of a compression in volatility from that point forward. I'm going to go over the Dow real quick here, just to show you what it looks like, and then I'm going to go back to that concept that I just gave you and kind of walk you through some of the things that I've seen that kind of echo that. So in the case of the Dow, we had a gap down back in late February. We had the flush down late March. So we could start that level at 28,500, and then go down to 18,177, before we rally all the way back to 29,000, which is essentially where we broke down from. And then we went back and retested kind of this downtrend that we were in from that gap down. We held, and now we're pressing back up against that 28,200 level. If you pull back this level that we retested, it essentially was that uh, early on 2018 high. We retested it, we held it, and now we're setting ourselves up for a potential retest of prior highs. Now, the I'm going to go back to that comment that I was making about election uncertainty and VIX volatility eventually compressing if the gaps widen, et cetera, et cetera. So, like I said, the market is a forward pricing mechanism, and if you take a look at the last few weeks, and you start to see some of the stocks that didn't perform in September, and some of the stocks that did perform, you start to see that there might be that potential that they are, in fact, pricing in a Democratic victory or a Biden victory. And again, I'm saying this from an apolitical standpoint. This is just some of the things that I'm seeing. So first and foremost, solar has outperformed any other sector across the board in the market. And so I'm just going to go through some of these charts. Um, uh, JKS started at 19. It's more than doubled, and this is in the path of a month. And then you can just go down the line one by one. You're starting to see, and you are seeing, strong outperformance in these stocks and in this sector in particular. So if I just go back to TAN, which is the sector, started on September 4th. It was at $49, and then here we are today, closed at 70.55. So seeing some significant outperformance here, and seeing some significant performance in this group and in each individual stock up and to the right. Um, and then I outlined this on StockTwits last week. SPWR is a perfect example. You see this gap up, flag, breakout, and it runs, and you think I can't. I'm chasing. I can't get it. But if you zoom out, you see that it's in fact coming from a potential really serious double bottom and it has a lot of room to the upside to potentially catch up on. And this probably, and this is presumptive of me, this probably is potential for any potential democratic policy that takes place, in particular for the Green New Deal that you hear about. So these are just some of the concepts that you want to see potentially play out if, in fact, that is what's going on. Now, if that's not what's going on, then there's something else under the surface, and then we reevaluate. But this is kind of the logic and some of the logic that I've applied here. So one of the stocks that was asked about was First Solar on this. First Solar, ironically, or not ironically, however you want to call it, was in fact lagging that group, and it just broke out today above its 50-day. So for the last month, it's been in this downtrend, and then it retested this uptrend that it's been in since April. It held its 100-day, give or take, and then just today it broke above its 50-day. It did, in fact, fill that gap once it broke up above that 50-day. I'd look for some consolidation and then some further upside if, in fact, it is going to continue. If not, it should potentially retest that 50-day before moving forward. Now, kind of along the same lines, during the last few weeks, months, etc., we've seen lithium stocks, which are, again, kind of that alternative energy play, start to perform and act well. This, I'm going to point out PLL, which I guess struck a deal or had some sort of agreement with Tesla. I don't particularly know the name, but it was requested, asked about, but essentially gapped up huge. It's been holding its 5-day and is potentially setting up to retest its recent highs. I'm not familiar with the name, so I'm not going to pretend like I know what I'm talking about here, but it falls along the same concept and same space as some of its peers. ALB is one that I am familiar with. Excuse me. This is one that I actually own. I've owned it for the better part of 2 years, but this is one that I like. I like this one long term personally. It's tough for me to trade it, but essentially you're looking at longer term moving averages as support. So in this case, 100-day, 200-day. And in the case of ALB currently, it trended along this uptrend. It broke down. Currently, we're going to go back up and retest this uptrend. I'd be a net seller on the short term for me. This is what I would do if I was trading it. This is not advice in any way, shape, or form, but essentially, I'd want to see some sort of consolidation before a catalyst breakout or some sort of breakout above 100. I'm going to post Solar Edge because I forgot to post it, but this is again same concept from before. Uptrend retest, held, broke out, took out new highs, and it's up and away. So these are some of the sectors that have been materially outperforming. SQM just broke out of its recent range today. LAC is another one. It's been a monster. It's a really tiny one, but it's been a monster from bottom left to the upper right, and seems like it continues breaking out every time it breaks out to fresh highs. So gonna move along. Same concept that I started with. You had consumer discretionary was one of them. And you had healthcare, and you had financials, which are the three major components of the IWM, or three of the major components in the IWM. And I'm going to move along, and I'm going to start tagging some of these consumer discretionary. Now, some people will have consumer discretionary as like strictly retail. I am familiar that the consumer discretionary ETFs do in fact hold like Amazon and Netflix, But for the sake of this conversation, I'm just highlighting stocks that are consumer driven and that are like consumer friendly, just to show and to illustrate that there is, in fact, a base that you can trade from, and in fact, um, upside potential or levels to trade from. So so I'm referencing consumers here, I'm not necessarily referencing the XLY or the likes. I'm referencing consumer driven stocks or consumer friendly stocks or tells, excuse me, on consumer names and how the consumer is behaving. So let's start with Win. It's the first one that I have on my list here. Now, Win has that 69 level, 70 level, whatever you want to call it, as support. If it were to break down, it could get ugly. Given that it's not breaking down, I'm looking at the 20-day to essentially function as resistance. If it breaks out above that 20-day, look for this gap to potentially fill up to 77. Above that, look for the 50-day, and then ultimately test the top of this range, which is essentially the 200-day. So I'm looking at basically 90 to the upside if it starts to get going, and if it breaks down, or look for that 69 level to be the line in the sand in that one. DraftKings is similar concept, but had a secondary, and it looks like it didn't do anything, right? So, strong name, strong trend. Um, if it starts to act a little weak, I'm looking for the 20-day to hold. If it doesn't hold, again, come back down to the 50-day. That would be prior highs. 50-day, perfect place to set a trigger for a potential entry. So I'll actually do it here right in front of you. All right. So have this, call it 45 level as a prior high, and ultimately could be 50 and or 100-day as support simultaneously if this were to start selling. Moving along, let's go do Penn. This one's consolidating, 20-day axis support. If it breaks out above 75, should continue higher. Let's go UAL Airlines. UAL had a nice push on Friday on the back of some airline news. It stalled right up against this gap fill, basically at 39. If we can start to break out again, I'm going to look to see that 40 level ultimately get tested. If we can break out of that, I'm looking to see that 200-day get tested as well. AAL is another one. It's pressing right up against this downtrend. Break free, look for that 14 level to test. And again, same concept, go back up to the 200-day if we break out. Let's do Delta as another one. Delta's one that doesn't trade as aggressively, I guess you could say, as the other ones. But Delta is one that if we can break out of this high that we set today and Friday, I want to see it test the 200-day. I don't particularly trade this one. I prefer UAL and AAL. As a proxy, I like Boeing. Boeing has been challenging its 100-day and 50-day confluence the last couple of days. So if it can push through this recent high that it's set, call it 173. I believe that 173 level is weekly resistance as well. Yeah, you're looking at that 20-week. If we can push through, Boeing has a lot of upside. I mean, you're looking at a solid 30 points basically before it gets anywhere near its 200-day. So this is one that I actually have put back on my radar. It generally trades against that weekly time frame, so you want to be really cognizant of those levels more so than the other ones. At least that's how I trade it. But it is pretty liquid. It does have FAA potential catalysts coming up, and it does have airline headlines as potential catalysts coming up. Going to move along. Outside of this, you're looking at housing. Housing has been on fire. One of my favorite housing derivatives is Zillow. One of the cleanest charts that you've seen in the market, slow and steady. bottom left, upper right. I highlighted it about 5, 6 times back when it was at 67. I've made pretty much $12 trading this name, unfortunately, because I didn't really buy it. I do own Redfin though. I've owned Redfin for more than a double now. Redfin is consolidating nicely. 55 probably triggers it. Really like this name for more upside as a housing sympathy play. Another way to play it is WHR. That's the one I pulled up. WHR broke out today. More people are buying houses. More millennials are buying houses. People are moving into the suburbs, out of the cities. If they buy houses, if they move into the suburbs, they're probably going to buy stuff like this. Rates are cheap. This is a solid derivative. Now, another derivative to that is Home Depot. Home Depot is setting up for a breakout here. If it can break out, um, then you're looking at if it can break out above this 283 level, look for 286 to get tested above that. Look for recent highs at 290, 292. Lows is another one. This one's pretty straightforward as well. If it can break out, look for continuation. I like to pull these up on hourly time frames and 4-hour time frames just to get a better glimpse and a better sense of how they're going to potentially trade and what could trigger them. And it looks like this one is pretty close, right? So this is how I look at things. I'll try to narrow it down as short a time frame as I can, and go from there. So moving along, we'll have, let me put it back on the daily. We'll have Restoration Hardware as another one. Restoration Hardware is a very tough one for me to trade. I'm not very good at it, but essentially 400 and you'll potentially trigger back to recent highs that it set after its earnings release. From there, I'm going to just I'm just going to start posting some other consumer names that I've flagged. Ulta is one. It started to break out today. This one's pretty simple. It's really consumer driven. People like makeup. People buy makeup, and so Ulta is one that if it can continue, looking at 250 to the upside. Nike's another one that I just really like. Now I'm going to show you. It's been consolidating. I'm going to show you why I have this blue line as my trigger point. So on an hourly basis, this is that line in the sand where it started to stall, and then above it, you're looking at this line here that I'll just put up for you. So call it 128.50. From there, look at 129 or 128.80 to get tested. From there, look at 129.50, and then look at 130. If 130 can break out, Nike's it's the swoosh logo that they have is in vogue for the setup in the stock as well. So look for it to swoosh if you can take out that 130 level. I really like the setup. I really like the name. Really like the quarter. Like everything about the stock. Now, outside of Nike, I'm going to go over some of these consumer names that I am watching that aren't necessarily stocks that I've traded as momentum, but could in fact create catch-up plays and create momentum setups moving forward. So I'm going to start with, I'm going to do the first derivative, obvious, that people think of when they think of Nike, and that's Lulu. Lulu's struggling with its 50-day. I am not a fan of Lulu. I'd rather just trade Nike here. I don't think that it's worth my time to try to garner and time this one. But if it is to close above its 50-day, you could look for it to potentially press up and fill that gap back up to 350, give or take. Outside of that, there's the Under Armour is the other one. That one's pressing right up against its 200-day. Now, if it can get through its 200-day with some meaningful volume, sure, I'll consider it. But until then, I'm not interested. Skechers is another one. This one's breaking out of a downtrend, but again, just straight Nike. There are some interesting names that are starting to act pretty well. Starbucks is one. It's setting up to break out of this downtrend. It's a year and a quarter basically worth of a downtrend. If it can push through this 80 and 89 level, 88, 89 level, call it 90. If it could push through 90, you're looking at a gap fill to 92 and then 94 on the upside. If restrictions stay loosened, which you can expect that the entire economy isn't going to get shut down the way that it was previously, and with some of the COVID data that's coming out where more people are getting sick, but it's not compounding into a accelerative death rate, which is the more important number. So if these things stay intact, look for stocks like Starbucks to perform. McDonald's is another one. It's starting to create all-time highs and relative absolute highs. So it's another one I'd watch. Yum Brands is another one that I flagged. It has broken out of its downtrend here. It also recently pushed out and above all of its moving averages, and they're starting to act as support. So if this continues, that's one that you can start to see a chase in as well. You can go across the board too. Cheesecake's another one above 30. Look forward to test this downtrend that it's been in forever, basically. And so these are kind of the names that I look for in this space. And then I'm going to push on in a nice, seamless transition to the transport space, excuse me. So FedEx is one that has been a monster ever since they had earnings in June and has been just on a tear. So it's gone up 100 points. It's gone up basically 60%, 66%, something like that in a span of 4 months. It's pressing up against highs it hasn't seen since September of 2018. I really want this one to consolidate or pull back some so I can pull the trigger. It's not giving an opportunity. So in that case, I will default to UPS. UPS is consolidating, setting up much more nicely from a trading perspective, not necessarily from an ownership perspective. I don't know the difference. I don't know the metrics, that is, to tell you which is which. But essentially, you're looking at, if I pull up an hourly, you're going to see a little bit downtrend probably. Yeah, so you're looking at this little downtrend here. And if we can push through, look for recent highs back up to 172, get tested. If I can go back to the daily. There's some other transports. Cummins started breaking out today. PACCAR, same thing. And then Union Pacific was my favorite. That has been my favorite rail that has been slow and steady and has been riding. And I already mentioned it, but Boeing is one that if I could get this push through 173. I'm liking the odds of it to test 180, 187, and then ultimately 206. From there, there's a couple of other sectors that have been flying under the radar. One is utilities. I mentioned this one in our chat about a week and a half ago as a win-win for any administration, like with yields being where they're at and bonds being zero. Investors who invest that way are going to look for places to find yield, and I think utilities are by all means a place to find those yields. So more housing starts equals more electricity. More people paying their bills is going to increase upside. More development on infrastructure equals more money down the line for these guys. So there's a lot of ways for them to win. I'll potentially make a more of an in-depth, flushed out thesis for you, but I'm just kind of going off memory and kind of going off the riff here. Um, SO is another one. It's broken out now. It's testing its 200 day, and then conversely, or you know, on an opposite spectrum or a different spectrum, and kind of the same thought process though, like where can you chase value? You're starting to see some real outperformance in agra and in stocks like Mosaic, for example. Broke out of this really long-term downtrend and is setting up for further upside now that it's tested its 50-day and it's held. Archer Daniel Midland is another one. Strong outperformance, strong relative strength, and setting up to be another stock that people look for further value. So if you're one of these people that look for investing and look for value and look for stocks that are not Microsoft, Apple, uh, Amazon, Tesla, these are some of the places that people are looking. Another place to look, and the same concept with the IWM, is bio. So biotech broke out pretty heavily today. Came on the back of that Trump COVID news and him taking that Regeneron cocktail. So let's start with region. It pushed up past its 50-day, stopped at its 100-day, and ultimately stalled just below this prior, if I could just pull it all the way back, this prior high that it had back at 605. So essentially, I don't know what to make of it. I don't know what to make of the Trump headline. I saw part of an interview with Fauci today where he basically um, pumped it as well after hours, but I don't know. I don't know enough about the medicine, but I do know that it really helped the space, and you can, whether it's IBB, which I pulled up already, or XBI. XBI is pressed up against that 116 level, and if it can take that out, it should, and emphasis on should, test 119 and then ultimately that 120, 121 level that it tested recently. In the same space, but not in the same space, ISRG, um, holding its 50 and 20 day and its prior breakout point. So if it can continue to hold this and continue to find some sort of buyers, it should press through 720 and should retest this recent high that it had. Call it 780 to the upside. Amgen is another one. This one's been kind of schizophrenic. You get these really wide bars, but ultimately, if it can push through this 260, 262, give or take level, it should really start to outperform. I like this name in particular. This is one that I own. XLV is another sympathy. It's a lot of the stocks in this one don't really trade that aggressively for that long, but they have been holding this 200-day region. J&J is a perfect example of this. And then some of the COVID names are starting to act a little bit more favorably. Moderna, for example, holding all of its moving averages after testing its that 52 give or take level that it broke out from. So Moderna's one. Teladoc's another COVID sympathy play. It broke out of this downtrend. I don't have an edge on this one. I prefer the partner that they have, Livongo. Same concept though, starting to act constructively, and I like this one to potentially take out this 150 level. If that can go, then it's off to the races for that one. On Track is another one that I don't necessarily trade, but it is very constructive, very solid. 78, 79 line in the sand. Call it 80 line in the sand, and it's acting very constructively. Held that 50-day, held its prior resistance, and setting up pretty nicely. Now with COVID and with all that stuff, Thermo Fisher is Like if you liken it to the gold rush, instead of looking for the gold, look for the people that are selling you the materials to find the gold. This is a beneficiary of everybody needing tests and everybody needing results and some of the materials that go into these things. Abbott Labs is another one. This is a testing play, and then AbbVie I noticed today was it's not either of those, but I noticed was starting to act constructively after finding some base. One of the ones that was asked about was NVAX. It's pressed up against this downtrend. Let me clean this up a little bit. Pressed up against this downtrend. If it could break through, I'm looking for that 50-day to get tested. And then there was one other one. Let me see if I can find it. Not sure. I'm not sure where it went, so I apologize. But if I find it, I'll post it as well. But those are the ones that I'm watching for the most part. BIIB is another one. If it can get through this 287, look for the 200-day to get tested. Not sure if I covered it, but Gilead's starting to press up against that 20-day. If Gilead can base here, and if it could really start to find some sort of legs or find some sort of balance, above 64, I like it to go to the 50-day. So outside of that, let's just do the old reliables that everybody always asks for and call this a wrap. So AMD, I'm going to start there alphabetically. AMD 87 triggers it. Should go then to that 88 level where it broke down or gap down rather. Above this level here, let me highlight it with an arrow. Above this level here, and you've got gap fill potential on this one. AMD is not the only one. NVIDIA is a solid setup again. And what you're going to want to see AMD do on the previous chart is kind of the same thing you saw NVIDIA do recently, which is press up against this. Here's a visual for you where it presses up against the top of that gap down from early September. So AMD or NVIDIA already did that. Now we want to see a breakthrough, and if it breaks through, we're going to see potentially 570 to the upside on this one. Avago is one that I struggle trading. It's one of those own it, don't trade it stocks, but really wide base. Broke out recently, and now it's setting up above 371, probably goes to all-time high. Above that, it should continue. Let's go with some of the ones that were asked about. Ring was one of the ones that was asked about. I don't have an edge on this one. It retested that prior high and held, and then it failed at this uptrend. If you can break through this uptrend and this level right here, it sets up for a gap fill. So that's one. That's how I would highlight that one. Shopify is another one. Shopify is starting to act constructively again. Should test the highs again pretty soon. Now that one of its peers, same segment basically, Square, pushed to an all-time high. So in the same line of thought, you have BigCommerce, which is the direct competitor that trades to Shopify, pressed up against that 95 level today after breaking out of that 90 level, which I highlighted a few days ago online. Feel free to look up that chart. If it can break through 95, looking at 100 to get tested, and then ultimately 104. Same line, same category. Etsy looks good. RSI is a little high. It's riding that 5-day. So as long as it rides the 5-day, it should continue. If it fails the 5-day, look for a retest of the 20 and 50-day, and then from there it should continue. So outside of that, let's keep it going with some other ones. CRM through 255 is where I'm interested. Really like its slow consolidation that it's going through. If it can push through 255, again, I'll be interested. Neo was one that was asked about. Really like this setup. It's holding that 5-day after breaking out. If it breaks out of this downtrend, and I'll show it to you on the hourly so you see it a little bit more clearly. If it breaks out of this downtrend, should continue higher, should test those all-time highs. Peloton, not sure where you put that one. Riding the 5 day, starting to get slightly elevated to become potentially parabolic. Fastly is another one um, on the back of Twilio. So Fastly above 100 should test 103. Did that last week, above 103, gap to fill to 105, and then ultimately 108. So um, like this one above 100, and then like this one above 103 in particular. Twilio is one that I just mentioned, pushed up, created a new high, closed below it. Now it's consolidating. Want to see some more consolidation here before it takes out that recent high that it made last week. If it takes that out, should continue up and to the right. Do a couple more Amazon, just do the ones that everybody likes. So it was in this wedge, this uptrend, or this bear flag, uptrend, wedge, whatever. I said three different things. It was in a wedge that was in a bear flag, and it broke down on Friday, but it failed to hold that breakdown. So this gives you a sense of the kind of market that we're in for some of these momentum names that kind of carried the market for a while. It closed above its 50-day, so I'd like to see it hold that 50-day tomorrow if it potentially opens there. And then if it does do that, I want to see it press back up to basically 32.50, give or take. So if it can do that, it sets up pretty nicely. And if it fails there, then again, look for it to retest the 50-day, and then depending on news cycle, depending on headlines, yada yada yada. I will note that it's pretty difficult for some of these names to sell off once earnings season actually kicks off, because then they become data dependent. So right now we're in this like chop zone because it's headline to headline, no real catalyst, kind of tired. Breadth is widening. Some of these names are weaker, but as soon as we get some of these headlines out of the way, and as soon as we actually get data, which is earnings, and once that quiet period for buybacks is no longer, you should see some sort of momentum in some of these names again. So Apple, same kind of concept. I highlighted this one the other day pretty briefly. It failed that uptrend retest, and here highlighted by that arrow, held by the 50-day. I'm not sure which way it's going to go, honestly. Again, another one of those own it, don't trade it kind of things, but if it can not sell off, it really sets up into earnings on the back of Christmas being around the corner and an iPhone 5 refresh, or not iPhone, excuse me, iPhone 5, wow, iPhone 5G refresh with Christmas around the corner. So let's keep it with Facebook, same kind of concept, back into this megaphone thing that it had. Not sure what this line is, where it came from, and what's going on here. So I'm going to delete it. Yeah, so back into this megaphone, finding resistance, installing at this 50-day and 20-day confluence. So you want to see it push through, and if it can push through, you'll get that retest of 280, and then if it has solid headlines or if it has solid earnings, etc., you should see further upside. Now, this is going to give you an example of what I meant by smaller names outperforming and the bigger ones not performing. So Facebook's been stalling, but you've seen under the surface other social names like Pinterest really outperform. Twitter, which is at like 5-year highs, really outperforming now and really setting up nicely. And then Snap, which is breaking out above 27 and should, I want to emphasize, should potentially test its all-time high soon. So just because you see some of the big ones not perform, it's really important to look under the hood, and you'll see that some of these smaller names and some of these names that don't necessarily have the mega cap weight are in fact performing. So this is just to illustrate the point, kind of drive it home with some of these names. Google is one that gets asked about, but like I don't know how to trade this thing, to be honest with you. It kind of has a mind of its own. I just buy it. I own it. Every time I get a little reset, I buy it. So recently I bought it off the 200 day. And I'll hold it. Like, this is one that I'm comfortable holding. It's not that expensive. I don't really have an edge in it for trading. I prefer to trade the high flying Momo one. So, speaking of which, Zoom is one of those high flying Momo ones, and it's been in this uptrend. Get it to snag. So it's been in this uptrend, and it's starting to challenge. I'm seeing it challenge its moving averages more and more daily. So if there's any notable weakness in some of these COVID names, this is one of the ones that I'd look to see if it would fail. And I'm not predicting that it will fail. I'm just saying that if there's weakness, this is one that I'd look to see um, if it failed. So outside of that, I want to see if this downtrend breaks out. So if this downtrend on Zoom breaks out, then take everything that I just said about it potentially failing, throw it out the window. This is one of the ones that I like trading when it starts to have volume, starts to have momentum, because it reminds me of how Tesla traded prior to Tesla's split. So I think that's a good segue to pull up Tesla. Um, it's got a little bit of an uptrend, I guess. I don't know. It it's dead money, is how I'd say it. Um, I like to think that I trade this one pretty well. I've traded this one pretty well all year. I've made a killing in it. But there are periods where this stock does, in fact, behave like dead money, and we're in one of those periods currently. Now, that said, it is basing and it is setting up for a potential rip here. So, just with Tesla, I find that setting it up on a daily time frame first and then narrowing it down to an hourly time frame kind of gives you a little bit more of a gauge um, to trigger it. Now, if it doesn't get sold before earnings season starts to come around, it's going to be pretty difficult for them to sell it. This thing kind of just moves on any headline that they come out with. So um, it's dead money currently, is what I would say. There's no edge. If it breaks that 20-day that it stalled at on Friday, like literally closed at the 20-day. So if it breaks this 20-day to the downside, it really opens the door for that 50-day to get tested. I don't think that you'll see any meaningful sell-off in the name if the 50-day does not break. So if the 50-day breaks, then we really have problems in this name. It sets up for the 100-day to be tested. But by and large, it's kind of dead money here. I'm not really interested in it for anything. What I am looking for, like I said, is some of these names that are flying under the table, under the radar, excuse me, and are setting up for further upside and don't necessarily have a huge impact on the indexes. So look for the perfect example I gave you. Look at how Facebook behaves, and then look at how its peers, Pinterest, Twitter, and Snap, have behaved recently, and you'll see that your outperformance is in the latter and not the former. So I think this is a good place to stop currently. It's been about an hour. Thank you for checking this out. If you have any questions, comments, concerns, at me, at every time I cash. You want to cuss me out, at me, every time I cash. You want to call me an idiot, at me, every time I cash. Don't like what I have to say, block me. Doesn't matter. So if you want to reach out to me not publicly, feel free to use my contact page, everytimeIcash.com/contact. If you have any questions, comments, concerns, want anything charted, that is how you reach out to me. I will chart bomb all these charts on social media, so look out for them if you want to see them. Feel free. If you have any other things that you want charted, reach out to me. I won't include it in a video, but it'll be posted. So until next time, please stay safe, stay profitable, and stay locked in.